Good morning and a very warm welcome. I'm James Preston for Kalkine TV, reporting to you live from Sydney, and this is the Global Markets Roundup program. Let's dive into some key highlights and happenings from yesterday, starting with the US market. A gauge of global stock markets trimmed gains in choppy trading on Wednesday, and the US dollar strengthened after the Federal Reserve cleared the way for the central bank to reduce its monthly bond purchases. MSCI's gauge of stocks across the globe gained 0.65%, bouncing back for a second day after it logged its biggest one-day percentage drop in 2 months on Monday. Benchmark US indices reclaimed grounds on Wednesday, September 22, after a steep sell-off in the previous 2 sessions, boosted by the Federal Reserve's positive economic assessment. The S&P 500 was up by 0.95%, the Dow Jones rose by 1%, the Nasdaq Composite Index rose by 1.02%, and the small cap Russell 2000 was up by 1.48%. The central bank on Wednesday indicated that it will start withdrawing its asset buying program and raise the interest rates as early as next year. The comments come after its 2-day monthly summit. US stocks had retreated in the previous 2 sessions after the Chinese real estate giant Evergrande's debt crisis intensified, which ballooned to $300 billion. Energy, financial and technology stocks were the top movers on the S&P 500 on Wednesday. Materials and communication stocks were the bottom movers. 6 of the 11 index segments stayed in the green. Stocks of transport company FedEx Corporation fell 8.96%, a day after reporting its quarterly results. The company missed the analyst earnings forecast and reduced its guidance due to supply chain limitations. Moving on now to futures and commodities, and gold futures were down by 0.55% per ounce, silver increased by 0.33% per ounce, while copper rose by 2.37%. Brent oil futures increased by 2.1% per barrel, and WTI crude was up by 2.11%. Let's also take a look at the bond market. The 30-year Treasury bond yields were down by 2.57%, while the 10-year bond yields fell by 1.64%. The US dollar was choppy on the heels of the latest policy announcement by the Federal Reserve on Wednesday, while risk-sensitive currencies such as the Aussie dollar and Chinese yuan strengthened after China's Evergrande said it would make a bond coupon repayment. The US dollar futures index also increased by 0.3%. Let's now take a look at some other markets. European stocks rose on Wednesday after debt-laden real estate developer Evergrande said it would make some interest payments, while investors awaited a signal from the US Federal Reserve on how and when it will rein in its massive stimulus. The Europe-wide Stock 600 index rose by 1%, extending Tuesday's bounce after its worst session in 2 months, with commodity-linked stocks and banks leading the gains. The FTSE 100 has strengthened further on Wednesday, trading up by 1.1% at 7,057, while the mid-cap focused FTSE 250 index trading at 23,739, up by 0.54%. The blue chip index extended its rally for the second consecutive day, supported by the casino and mining stocks. Commodity prices recovered after the fear of a crisis in the Chinese economy due to the Evergrande default eased. A number of travel stocks also experienced a positive bump following the lifting of some travel restrictions and the view to more countries opening their borders come Christmas time. Also, a new takeover bid for sports betting company Entain plc led to gains in the casino stocks. And now it's time for a very short break on Kalkine TV, but stay tuned as I'll be back with updates from the Asian and Australian markets in just a moment. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back, James Preston with you on Kalkine TV for the Global Markets Roundup show. Let's now turn our attention to Japan. The Nikkei hit a more than 2-week low on Wednesday as investors looked ahead warily to the outcome of a US Federal Reserve meeting, seeking more clues on when policymakers will wind down stimulus and lift interest rates. The benchmark closed down by 0.67%, while the broader Topix slid 1.02%, which was its lowest since the 6th of September. From Japan to China, and the Chinese blue chips fell on Wednesday when the market resumed trading after a holiday led by banking and consumer staples, while real estate shares jumped as developer China Evergrande assured to settle interest payments on a domestic bond. Since the beginning of 2021, China's largest property group, China Evergrande, has been struggling to secure funds to survive. Last year, the government introduced new rules to regulate the important estate developers' escalating debt levels. Following this, Evergrande gave heavy discounts to keep the business running, but it now finds itself neck deep in debt with tumbling share prices and a downgrading by credit rating agencies at a worldwide level. Evergrande will make a huge $84 million payment in interest on its bonds tomorrow. Some industry experts see a Lehman Brothers in the making for Evergrande. However, others are of the opinion that the default levels aren't as substantial relative to the dimensions of the Chinese economy. Australia features a string attached to the Chinese market. In 2020, when Australia maintained its acing ore exports, China was the world's largest ore importer, accounting for 75.4% of the worldwide import volume, iron ore being a key focus for Chinese importing. Over 95% of the extracted ore is diverted towards steel making. Steel may be a highly used metal alloy utilised in construction, shipbuilding, infrastructure development, and of course in car manufacturing. Additionally, the blue chip CSI 300 index closed 0.7% lower, while the Shanghai Composite Index gained by 0.4%. And finally, let's take a look at the market performance on home soil. Australia's ASX closed up by 0.32%. Medical device company Cochlear Constructions, engineering company NRW Holdings, and energy company Genesis Energy are a few of the stocks that are going ex-dividend on Thursday. Energy stocks such as Woodside Petroleum and Santos could also rise today. Gold prices fell despite the Fed holding interest rates steady. Spot gold also fell by 0.4% per ounce. Australian gold shares such as Northern Star Resources and Newcrest Mining may also fall today. Iron ore futures in Asia rebounded on Wednesday. However, concerns remain on whether gains could be sustained on the back of a collapse in China's demand and improving supply prospects. January iron ore on China's Dalian Commodity Exchange ended 3.7% higher a tonne. And lastly, taking a look at the currency space, the Australian and New Zealand dollars were trying to find a floor on Wednesday as risk sentiment steadied a touch, though whether that is set to last will depend on what the US Federal Reserve might say on tapering later in the session. The Aussie dollar was a shade firmer, buying 72.41 US cents to the dollar, having found support at 72.2 cents with some stability. Well, that's all the time we have for the Global Roundup show. Keep watching Kalkine TV for more live market updates. I'm James Preston, signing off for now.